All right, Gavin seems to be having some technical difficulties, so he'll continue to try and join it, but we'll start as is as we go. So thank you everyone for joining today. On the line we have NED, or Non-Exec Director of RLF AgTech, Ben Barlow, amongst the Sequoia and Spark network. So as most would be aware, this morning we have launched a capital raising commencing with a placement for $1.05 million, thereabouts, at 3 cents with a 1-for-1 attaching option at 6 in RLF. So these funds will be primarily used. There's a little bit of debt repayment, but as we'll go into the presentation and Ben will explain in greater detail, the majority of the funds are being used to amp up or supercharge, should I say, the Australian business, which the company have recently reacquired from the previous owners. RLF AgTech was IPO'd onto the ASX back in 2022, and at that time it was an entirely Asian-facing business, so 100% of the revenues were derived from China. Since a management refresh earlier this year in May or June, I believe, there have been significant steps to change the fundamentals of the business, including an acquisition of a company called Liquiforce Proprietary Limited, which adds significant scope of revenues, as well as the acquisition of the Australian distribution rights, which the guys will go to in greater detail. As I said, but I'll repeat now, obviously this is a webinar function, so please, if you have any questions, feel free to write them into the chat and I will read them out at the end. We'll keep this to a tight 15-20 minutes. And Ben, without further ado, I will take it. You can take it away, please.
Okay, thank you. Welcome everyone. I think I'll be running through the deck as I guess in a shorter space of time as I possibly can to allow a bit of time for questions at the end. But effectively RLF is a business that's been going for a bit on 30 years. It makes liquid fertilizers here and in Queensland and WA, and has an export business, or a business that they've got in China, which is a very good one. China serves to generate about 10 million in sales. It's got a production facility and large distribution rights there. The company owns all its intellectual property and distributes globally, but it's interesting, they have a really good formulation and a long product life, which is really important. Last year, RLF acquired Liquiforce in Queensland, which sees its revenue move from last year's around 10 million revenue to about 25 million potentially this year. Next slide. So we've been busy sorting the business out. So the business had some trouble in the middle of the year, but basically since then we've regained the Australian distribution rights back, which is really important when we look at our presentation today, because effectively that gives us access to the Australian markets. When the company was listed, it was listed as a Chinese business and it didn't have access to the Australian markets. So this gives us a pretty handy opportunity at the moment. Acquisition happened in the last year where we bought Liquiforce in Queensland. We've also expanded facilities. The facilities now are improved and upgraded and allow us to operate in Queensland. We've reshaped the carbon business and it's up and looking well. And particularly it was quite an expensive part of the business to run, and now is running better. And Gavin's just joined us, but Gavin
have joined.
Good, mate. I'll let you take on in a minute, but Gavin's just joined at the opportune time. I was saying key appointments. So Gav, welcome. I'm having a bit of a start here, but you're much better at this than I am, of course.
Thank you, Ben. So I'm terribly sorry, everyone. Technical problems, but I'm on my mobile now. Thank you for taking over that. And I think I'm going to just guess where you're up to, but fundamentally, Ben's given you an idea of what we've done to refresh the business and to focus this business on its commercial opportunities and its revenue opportunities. One of the big things was actually Ben joining us. Because of Ben's background and experience, it's given us a real head start in setting up the Australian business. have you gone over the?
Yeah.
We've obviously gone over that. So should we
Yes.
skip to the next page, which is about
Yeah.
the products? So the bottom line with our business is that we manufacture this amazing range of products which have been developed over the last 30 years and have been in market for over 25 years. And they underpin the growth within our business. The reason is because these products are shown to deliver some the benefits such as increased yield, which is obviously very significant. And over thousands of data points, we've been evidenced the 10 to 30% yield improvements that are achieved by the use of these products. Now, when we first started this business, it was probably a little bit early. So 25 years ago, and certainly when I got involved, 15, 14 years ago, it was just a little bit early because people really didn't have any motivation to change their farming practices. But now today, because we've seen such pressures such as the change in food security issues, so we've seen the big economies of India and China and Asia move into middle class, and we've seen that puts all this pressure on food security. We've also seen the focus on soil sustainability and soil health, and the big one is obviously climate and carbon, and that all together has really changed and the mindset of the industry, who now knows that they've got to farm far more efficiently and grow far more food with the resources that they've got. So with all that attitudinal change over the last number of years, we're seeing this movement towards reducing granular fertilizer, reducing nitrogen use, and using these products that are designed to grow more with less. And that's where RLF is, and our products have a head start of 20 years validating this yield improvement. On top of that, the other thing is this high quality produce. So the use of RLF products is shown to provide a healthier, more nutrient dense produce, but economically for the farmers and the growers, they get paid on the higher the quality, they get paid a higher amount. And that combination of yield and higher produce quality provides this return on investment to farmers. And Ben, your family has farmed for 150 years, so why don't you talk about how that actually does affect the farm?
Yeah, so do it very briefly, Gav, but basically we get paid on yield and quality. So yield per hectare is important, but also the amount of oil content in our canola, the amount of protein in our pulses and our cereals. So there's a two-pronged part to income. But if you just look as a farmer, if I'm growing an average of 3 tonne to the hectare of wheat, that represents a gross income of about $1,000 a hectare. If I take off about $380 to $400 a hectare in fertiliser spend, another $280 a hectare in chemistry, and then repairs and maintenance, people, staff, etc., we end up with about $80 in our pocket net on $1,000 a hectare revenue. So if we were to increase yields by 10%, that would give us an extra $100, obviously at the gross, and on a $20 a hectare cost, it'd give us an 80 net. So effectively, we're doubling farm profitability by using these products at the lower end of the yield curve. So that's what attracted me to it as a farmer. It's also worth noting that, you know, these products fit with existing products and practices, so we can actually apply it with chemistry and don't have to do anything different than what we do today, which is a real bonus. And it gives this agronomic benefit where we get more nutrients onto the crop at exactly the right time. So as a farmer, I'm looking at it. That's why I've joined, really, Gav.
Thanks, Ben. So let's move through the visual and the data, but the products have this verified track record of on-farm use. And that's what we're taking to the marketplace. So the business today really looks like the original business when we IPO'd, which was China. And China still is a growth opportunity for us. It was really what was achieved in setting up a fully owned business with its own manufacturing, its own distribution, is really at that point where it's hasn't even really scratched the surface of the opportunity of the size of that market in China. And for us, we've stabilised that China business now, and that China business is starting to grow again with its budgets, with its sales against targets already up by 25% this year. So we're seeing that market sort of still being a big driver for our business. The other big driver is the Asian business, which was sort of set up 4 years ago based out of Vietnam. And now that that's had time to start to develop within market, we're seeing real decent volumes happening at this point. So with the sell into a market, it always takes, they use a little bit of product, and next year they'll start using more as they see the results. So that is starting to accelerate. Plus, we've got new markets that are coming online in the new year, such as the Philippines, and we're actively setting up and establishing distribution in bigger markets like India. The Australian business, though, is where we will get this very quick contribution and quick turnaround. And it was fundamentally, when I stepped into this position, one of the key objectives in this business and getting this business sorted was about getting the Australian rights back and the ability to manufacture and sell these products in Australia. We obviously did that in August, and we started to set up, and in terms of people and negotiating with distribution. And the Australian business is where we're going to get this quick opportunity to have this contribution and sales. And it's a big opportunity for us. So combined with the Liquiforce acquisition that was made and the new Australian business that we're funding today, that is where most of our growth will come from in the next 3 years. The carbon business, whilst I've obviously stopped all the spending on that and restructured it, is still, again, over time going to be a big revenue opportunity, because we're selling products. We're selling products that can generate soil carbon in a commercial farming practice, which is still really unheard of at the levels we're talking, that where it fits absolutely into the practice. So we will see that market start to evolve. The farmers are already talking about carbon. They know they've got to do something, but are slow to act. And over time, that's still going to be a big driver. So we will still continue to work on that, and we'll start to see results come through from our trial projects in Hillston shortly. So we have 3 revenue businesses and 1 new revenue business, which is Australia. They're going to give us the opportunity to obviously grow the business, grow the revenues, and turn the business around. So we're really targeting growth. Now, this growth number is affected by the acquisition, which gave us a big step up in revenues. But we're really targeting realistic growth of about 25 to 30% each year in the operating businesses. So it's certainly not unreasonable given the size of the Australian market and given what we've been able to do. So let's just go to the Australian sales model. We got back those rights in August. We recruited Paul Clausen to run that operation. We started the process of negotiating with distribution, and our aim in this model is to sell through this distribution. And the market consists of these 11 players. Ben, why don't you just do a bit on that, and then I'll pick up after you explain how it works.
Yeah, so in a previous business I dealt with these 11 groups, and basically in a normal year you sign an agreement with those groups, and that gives you access to all of their stores. That's 1,300 odd, nearly 1,400 stores in Australia now, but it's quite simple. You can look after all those stores with about a sales force of 2 or 3. So in our previous business, we looked after sales that were north of 40 million with 3 people into these branches. And this takes you, each of those branches has agronomists that deal with farmers that actively do the sales. But the interesting thing I found when I joined the company and the board was that we can offer those distributors a much greater margin than they can make out of traditional fertilisers and chemistry. So Gavin and his team have been instrumental in getting that locked down and getting that appetite settled. So this business is right now to be distributed across Australia.
Yes, we're on track for currently 414 points of distribution, which is well above what our target was, which was only 100 in the first year. And I think the reason it's been so successful and the distribution's been so willing to do this is because the range does provide a very elegant solution, and it does stand alone. So it's not, it doesn't exist currently within existing distribution. So we're not in there fighting for a substitution. We're not there saying, oh, we're a better product than this one, you should sell ours. We're actually in a space of our own. It gives them great.
Yeah, sorry, for those that aren't farmers on the line, it really means that we're providing a foliar product after the seed's been sown, and that doesn't exist in the retail sector at the moment, does it, Gav?
In this form, no. And these products, and what RLF does is provides a season-long program. So we don't just provide one product; we provide 6 products over the whole growing season. So that's products that actually are for the seed. So we start with the seed products for the first stage, so up to what's called 2-leaf, and then as the crop grows, we put different products, and that is focused plant nutrition that I spoke about earlier, where we're seeing people moving towards more understanding and implementation of this type of nutrition. For us as a commercial business, that gives us sales opportunities through the whole season. So we're not just selling one product that goes in here, we're selling these suite of products that go in at different stages. So that was super appealing for the distributors because it also gave them that opportunity to sell multiple products over the season. Obviously, one of the other things was we've got this massive history and providence behind us. So we've got a history of improving crop yields, we've got a history of improving quality, and we've got the data to back that up. So that really ticked a few boxes.
So potentially just worth mentioning, Gavin, that without that significant history of data and proven crop yield improvement, you just can't get into those stores.
Yes, I mean, that's right. You need the providence and you need the trust, because again, then no grower is going to use a product that isn't tested, and that's what obviously gives us the opportunity. So we're now looking at a distribution model of 400, and we're still talking to the others. So that really only consists of 2 of those companies, and we're still having negotiations with ongoing negotiations with the others. So there's a big opportunity to get the products in very widespread through that distribution, which is our strategy, just as it's happening quicker. The funds that we're looking to raise are going to go into the basics of business. So we need to recruit people. We're going to recruit a few more than 3. We'll have people in each of the major regions. We've decided to recruit experience. So these are people that know this distribution, that have worked within the distribution channels themselves and are personally trusted and known to those channels. So, we've already, I guess, worked out the people that we're wanting to bring on board. We're going to expand some of our manufacturing capacity, and both in our Queensland plant and our Perth plant, and we're also targeting the establishment of a plant in Victoria, New South Wales markets. Obviously, it's a manufacturing business, so funding is required for raw materials and stock on hand, and money is required to be invested in building the support network for this distribution, which consists of computer systems, ordering systems, online systems, but mostly things like training materials for the agronomy force within the distribution, and all the retail support and marketing information or product information required for the growers. One of the things is that we always do what are called demonstration trials. And to give you an example, we probably last year we did about 70 demonstration trials, and they're just with ambassador or growers that are well known in the area, where we support the promotion of the product. So they'll be doing some of that. But one of the interesting things that we have, one of the advantages we have, is that we're really the only listed company, specialty fertilizer company in this space. So we've got this listed entity, and we're going to leverage that listed entity by doing things with our customer base, such as if you are a shareholder of RLF AgTech, you will receive another 3.5% rebate. So we're really trying to use our listed status to be able to make our customers owners and make them want align their interests with ours. So we'll be doing programs based on leveraging this structure. The market here is obviously big. I might just ask Ben to spend a moment on what the Australian market size looks like.
Yeah, thanks, Gav. It's big. It's 28 million hectares here. The average, there's 18,000 growers or broadacre cropping people in Australia, and they spend roughly 400,000 a year on average on fertilizers. So if you work that out, it's about a $7.6 billion market. What's worth mentioning, though, is that of those 18,000, about 17% of those produce about 83% of the value of broadacre cropping outputs. So actually, it's quite a concentrated market. It's a market that we know, that I've been in all my life, I suppose, as a customer and a seller.
Yep.
It's very good. It's a big market for us, and the key is to get incumbency as quickly as possible.
But we've still been very modest with our growth forecasts and our growth potential. And, obviously we want to hit those out of the park, but need to be realistic in what we can roll out and what we've got ahead of us. But there are many, many drivers for growth within the whole business. So within our China, within our Asia, within our Queensland business, the Liquiforce, and within this new Australia business, there's all these drivers for growth, which obviously increased distribution, increased product range, and accretive acquisition in the future, if that's possible. In summary, because we're nearly at 8:30, this is a commercial business. It's a business that drives for profit, but in doing so, it also ticks so many impact goals in terms of what the products achieve in agriculture. I think it's time to pass to Michael, and Michael, you can do the wrap up.
Yeah, thanks, Gav. So as I said, as we jumped on the line, so it's a $1.05 million raising via a placement under 7.1 capacity. That's being undertaken at 3 cents per share. So that represents a 37% discount to the last traded price of 4.9, which we think is an incredibly attractive opportunity. Every share subscribed to under the placement receives an attaching 1-for-1 option priced at 6 cents. So if you use Black-Scholes on those, assuming about a 75% volatility and a 5% risk-free rate, those options themselves are worth about 1 cent. So we think it's an incredibly attractive opportunity to come in to a business that is clearly in the midst of a turnaround story, being led by two people who we think there aren't two better people in Australia to fulfill such an obligation. So as we said, there's the exponential growth through the Liquiforce acquisition, there's revenue diversification through the Australian distribution rights, and there are those environmental and social benefits that Gavin just touched upon briefly at the end. So with that, we're conscious of time. We will open it up to questions. See the first one's come into the chat. So Ben or Gavin, feel free to answer whomever you think is better placed. First question, do you own the IP over these products, or are the sales and manufacturing rights licensed through a third party?
We own 100% of the IP. So there is absolutely no third parties in any of this, with any of the IP and products.
Can you explain that in just in context of the reacquisition of the Australian rights, Gav?
When the business was IPO'd in 2022, one of the strange setups was that the founders carved out the Australian manufacturing and distribution rights. So under an agreement with AgTech, which is us, who owns all the IP and had purchased all the IP, they were licensed to manufacture and distribute in Australia. So that restricted AgTech in doing so. Until August, when we lawfully terminated those rights and resumed the ability to be able to use our IP and manufacture ourselves and sell into Australia. So it was a legacy from when the business was originally IPO'd that has now been extinguished.
Basically, we capture the whole margin from the IP right through to the retailer. Would be fair. And yeah.
Yeah, nice one. Another one. So what are some of the key milestones we can expect in the first 3 months of 2025?
The key milestones that we've got are announcing the distribution agreements when they're signed and fully executed. So there'll be those coming through. We've got the results of the Hillston project. So Hillston is our carbon project. We actually had we've had the sampling done yesterday for the an ACCU to see if we can generate an ACCU. So we'll have those results coming out with regards to the business. So, we've got really positive news flow in regards to the Australian business and the growth of the Australian business, including things like first sales and into the market from Australia.
Lovely. And another question, can you briefly cover off on the issues from mid-year that were referred to and how these have now been resolved?
The issues that obviously was a big decision to make and that the board felt they had to make, and obviously lots and lots of changes that were made. At this point, they are all covered off, excluding some litigation that exists. The litigation, however...
Maybe just go back a step, Gav. So
yep.
For those who are uninitiated, what actually happened in the middle of the year?
So in the middle of the year, the board removed the founding managing director on grounds of performance and the issues that we were having with conflict of interest and around that and other issues that existed. The board felt they had to protect the interests of the shareholders and replace him. I decided that I would step up and fill the role in an acting capacity for the next couple of years and get the business into a stable position. So that meant that we made substantial changes within, obviously, the costs and then restructured in terms of focusing everyone on revenue areas and then stabilizing the business. So for us, this is the final step in doing that, which is commercialising the opportunity we've got for the Australian business and setting up an Australian business based on this distribution model. So in a quick summary, that is all the changes that we've really made.
Yeah, brilliant. And I suppose worth touching on the fact that, and you don't have to go into it, I'm happy to, that Gavin was a non-exec director at that time, but had previously been an angel investor in the business. So back in 2012, actually put $2 million of his own money in. And then as part of this refresh, Ben was identified by the chairman as someone of interest and has graciously accepted a non-exec director role. But I think I'd be the first to tell you that it's been more of an executive director in the last few months with all the work he's doing. And final question, is there any remaining litigation risk relating to the founding MD?
The litigation risk is obviously cost of litigation, and it's in a process at the moment. Its monetary risk would be between $180,000 and $300,000 if we lost the case. So again, it's litigation risk, but it's not mind-blowing, and we feel that it's worth pursuing. But yes, there's that, but that's the only litigation risk that exists.
Yeah, beautiful. And as I say, Sequoia's, we did our own DD before taking on RLF, and we deemed it a relatively minor risk given the historic performance issues of the business. If there are no further questions, thank you everyone for taking the time to jump on. Obviously, bids due on this one 2 p.m. Monday Australian Eastern Time, which is the 16th of December. Either Alex, Richard, or I, or Tim from Spark are more than happy to answer any questions in the meantime. And thank you very much, and have a nice day.
Thank you so much, and I apologise again.
Thanks, guys.
Thank you.
Thank you very much. Okay, bye.